Accounting Standard 16, borrowing cost. What is borrowing cost? Interest and other cost incurred by an enterprise in connection with the borrowing of fund. Borrowing cost include not only interest but also other cost incurred in connection with the borrowing of fund. If you take a loan, you should pay interest on the loan, and also there will be some other commitment charges related to the loan, that all included in borrowing cost. The standard gives some examples of borrowing cost in paragraph 4. A. Interest and other commitment charges related to short-term and long-term borrowing. B. Discounts or premium related to borrowing. C. Amortization of ancillary cost incurred in connection with the arrangement of borrowing. D. Finance charges in respect of assets acquired under finance lease. E. Exchange differences arising from foreign currency borrowings to the extent that they are regarded as adjustment to interest cost. Paragraph 4E is an important paragraph that we'll be discussing at the end of this presentation. Exchange differences arising from foreign currency borrowing to the extent they are regarded as adjustment to interest cost. Next, which borrowing cost to be capitalized? Borrowing costs that are directly attributable to the acquisition, construction or production of a qualifying asset should be capitalized as part of the cost of that asset. It's an important paragraph. Which borrowing cost to be capitalized? Not all borrowing costs to be capitalized. Only the borrowing costs that are directly attributable to the qualifying asset, that only should be capitalized as part of the cost of the asset. That will be related to the acquisition of the asset or construction of the asset or production of the asset. Not all asset, only qualifying asset. Repeat, borrowing cost that are directly attributable to the acquisition, construction or production, ACP. Acquisition, construction or production of a qualifying asset, that only be capitalized as a part of the cost of that asset. The standard gives two conditions for capitalization. One, it is probable that they will result in future economic benefit to the enterprise, and the cost of that can be measured reliably. Always there is a thumb rule that whenever you want to capitalize an amount, that should reflect future economic benefit to the enterprise. That is applicable not only to the borrowing cost. All item when you want to capitalize, that should result in future economic benefit to the enterprise, and the cost can be measured reliably. It's a cumulative condition. Friends, we learned only the borrowing costs that are directly attributable to the acquisition, construction or production of a qualifying asset only be capitalized. So we should know what is qualifying asset. Qualifying asset is an asset that necessarily take a substantial period of time to get ready for its intended use or sale. You purchase a machinery today, that is not a qualifying asset. But you construct a building, that will necessarily take a substantial period of time. Therefore, construction of a building, that is a qualifying asset. Construction of plant, that is a qualifying asset, because that will take a substantial period of time to get it ready for its intended use. Friends, we should know what is substantial period of time. What is substantial period of time that primarily depends on the facts and circumstances of each case that differ case to case, but ordinarily a period of 12 months is considered as substantial period of time unless a shorter or longer period can be justified on the basis of the facts and circumstances of the case. Normally 12 months can be taken as a substantial period of time. The standard take a rebuttable presumption that a period of 12 months is considered as a substantial period of time. Friends, now we learned borrowing cost, capitalization of borrowing cost, qualifying asset, substantial period of time. A borrowing cost which is related to qualifying asset only be capitalized. What is qualifying asset? That asset will take a substantial period of time for its intended use or sale. What is substantial period of time? 12 months can be taken as a substantial period of time unless a shorter or longer period can be justified. The standard take a rebuttable presumption that 12 months can be taken as a substantial period of time. Now we will see an example. A Limited take a loan for ₹20 lakh on 15/5/2019. It was utilized for the following purpose: construction of shed ₹5 lakh, purchase of machinery ₹5 lakh, working capital ₹8 lakh, advance for truck ₹2 lakh. Construction of the shed was completed on March 2020. Total interest for the year ending 31st March 2020 was ₹2 lakh. Show the treatment of interest. Company took 20 lakh rupees loan. They have utilized for four purpose: construction of shed, purchase of machinery, working capital, and advance for truck. Friends, we learned that borrowing cost that directly attributable to the construction, production, or acquisition of a qualifying asset only be capitalized as part of the cost of the asset. The company took 20 lakh rupees loan. They incurred 2 lakh rupees as interest. The loan was utilized for purpose. You should know which is the qualifying asset. In this four expenditure, only the construction of shed, that is the qualifying asset, that will take substantial period of time for its intended use or sale. That will necessarily take 12 months period. Therefore, how much amount should be capitalized? 2 lakh rupees is the total interest. Therefore, 2 lakh into 5 lakh divided by 20 lakhs is equal to 50,000. Only ₹50,000 should be capitalized as part of the construction of the shed. The balance 1,50,000, that is 2 lakh minus 50,000. 1,50,000 should be charged to profit and loss account as interest. Only 50,000 is capitalized as part of the cost of the shed. We will see another example. B Limited obtained a loan of ₹10 lakh for renovation of a plant. Renovation process completed on 31/3/2020 for ₹3 lakh. ₹2 lakh given as advance to supply additional asset. Balance 5 lakh used for working capital. Total interest for the year is 1 lakh. Friends, we know what is qualifying asset. Qualifying asset is an asset that necessarily take a substantial period of time to get ready for its intended use or sale. The company availed 10 lakh rupees loan. Loan was utilized for three purposes: for renovation process of the factory, and additional assets advance is given for ₹2 lakh, and balance 5 lakh is used for working capital. Here only the renovation process of the plant, that only fulfills the definition of qualifying asset. How much amount we can capitalize as borrowing cost? ₹1 lakh into 3 lakh divided by 10 lakh, that is ₹30,000 can be capitalized as cost of plant. balance of rupees 70,000, that is 1 lakh minus 30,000, that should be charged to profit and loss account as expenses. Advances given to supply of additional assets and used for working capital are not eligible for capitalization. Friends, we can also make a different assumption that advance to supply additional asset is related to the plant. Then that also will qualify for capitalization. In that case, interest to be capitalized is equal to 1 lakh into 5 lakh divided by 10 lakh. That is 50,000 should be capitalized and 50,000 should be charged to profit and loss account if we take a different assumption. We will see another example. C Limited took a loan of rupees 10 lakh. The loan was utilized for purchase of shares of X Limited. Friends, the loan was utilized for purchase of shares. Shares are not qualifying asset because shares are ready for its intended use at the time of sale itself. Therefore, the interest incurred on that loan should be charged to profit and loss account, that is not eligible for capitalization. We will see another example. D Limited issued 12% debentures of rupees 10 lakh on 1/6/2019. The proceeds are to be utilized as below. Factory shed construction rupees 4 lakh, purchase of machinery 3.5 lakh, working capital 2.5 lakh, construction of factory shed that was completed in March 2020. Total interest for the year rupees 1 lakh. During 2019-20, the fund was invested in fixed deposit and earned an interest of rupees 10,000. The loan amount was temporarily invested in FD and that earned an interest of rupees 10,000. Interest on loan 1 lakh, FD interest income 10,000. Therefore, net interest is only 90,000. 1 lakh minus 10,000, 90,000. Friends, we should know which one is qualifying asset. There are three utilization. One for factory shed construction. Second one purchase of machinery. Third one working capital. In this question, only factory shed construction, that only will take a substantial period of time for its intended use or sale. That only qualify for the definition of the qualifying asset. For out of 90,000 net interest, only 36,000 will be capitalized as borrowing cost. 90,000 into 4 lakh divided by 10 lakh. That is 36,000 will be capitalized and the balance 54,000. 90,000 minus 36,000. 54,000 will be charged to profit and loss account as expenses. Rupees 36,000 will be capitalized as part of the cost of the factory shed. Friends, there will be two types of borrowing cost. One, specific borrowing. The second one, general borrowing. What is specific borrowing? A fund specifically borrowed for the purpose of obtaining a particular qualifying asset. Those borrowing costs that would have been avoided if the expenditure on the qualifying asset had not been made. This borrowing is taken only for the purpose of the qualifying asset. That be taken only for the acquisition, construction or production of the qualifying asset. If we are not constructing the qualifying asset, that borrowing cost would have been avoided. Second one, general borrowing. The fund that are borrowed generally and used for obtaining the qualifying asset. That borrowing we have taken not specifically for the qualifying asset, that is taken generally, but it is used for obtaining the qualifying asset. We have taken a loan, but that is not for the purpose of the qualifying asset we have taken that loan, but some portion of that borrowing we use for the acquisition, construction or production of the qualifying asset. Therefore, the borrowing cost to be capitalized to be determined by applying capitalization rate, that is the weighted average of the borrowing cost in case of a general borrowing. In case of a general borrowing, we should determine the capitalization rate. What is the capitalization rate? That is the weighted average of the borrowing. Friends, so there are two types of borrowing: specific borrowing, general borrowing. Specific borrowing, we can apply the specific rate, but for general borrowing, we should determine the capitalization rate, that is the weighted average of the borrowing cost. We will see an example. E Limited started construction of a factory on 1st April 2019, took rupees 1 lakh loan for the construction at the rate of 10% interest. That is a specific loan. Another general loans are rupees 2 lakh, that is availed at the rate of 12% interest, and another loan rupees 6 lakh that will cost 14% interest. The following expenses were incurred on the building during the year: 1st April 2019 rupees 2 lakh, 1st August 2019 rupees 3 lakh, 1st November 2019 rupees 4 lakh, March 2020 rupees 1 lakh. The construction was completed on March 2020. The company started construction of a factory, that is a qualifying asset. For the purpose, a specific loan is availed, rupees 1 lakh, that will cost 10% interest. So we can apply this 10%. And there are some other general loans, 2 lakh and 6 lakh. The rate is given 12% and 14%. So we should compute the capitalization rate, that is the weighted average rate. On following date, expenditures are incurred for the construction of the factory. The construction is completed on March 2020. We should compute the borrowing cost to be capitalized. Friends, since the expenditures are incurred on different dates, we should compute average expenses. Since the loan amount is utilized different amount on different dates, in April 1 utilized 2 lakh, August 1 utilized 3 lakh, November 1 utilized 4 lakh, March 1 utilized 1 lakh. Therefore, we should compute the number of months it utilized: 12 months, that is April 1 to March 31st, 12 months, August 1 to March 31st, 8 months, November 1 to March 31st, 5 months, March 1 to March 31st, 1 month. Our objective is to compute the average expenses. Multiply the expenses with the number of months, we will get product 2 lakh for 24 lakh, 24 lakh, 20 lakh, 1 lakh. Total 69 lakh. 69 lakh divided by 12, 5,75,000, that is the average expenses. After computing average expenses, we have two general borrowings. So we should compute weighted average rate of general borrowing. Loan amount 2 lakh and 6 lakh, total 8 lakh. The rate is 12% and 14%. Therefore, interest is 2 lakh into 12%, 24,000 for the first loan, 6 lakh into 14%, 84,000 for the second loan. Total interest 1 lakh 8,000. Total loan amount 8 lakh. So 1 lakh 8,000 divided by 8 lakh into 100, 13.5%. That is the weighted average rate of general borrowing. Now we know amount utilized, specific rate, and weighted average rate for the general borrowing. Specific loan we utilized for the construction of the factory, that is 1 lakh. The rate is 10%. 1 lakh into 10%, 10,000, that is the borrowing cost. Our total average expenditure was 5,75,000. Rupees 1 lakh we utilized from specific borrowing. Therefore, we utilize from general borrowing, that is 5,75,000 minus 1 lakh, 4,75,000 only we utilize from general borrowing. The weighted average capitalization rate is 13.5%. Therefore, borrowing cost is 4,75,000 into 13.5%, 64,125. Total borrowing cost is specific borrowing 10,000, general borrowing cost 64,125, total is 74,125. that borrowing cost we can capitalize, that should be added to the cost of factory building. We know the expenditures incurred on different dates, that is given in question. April rupees 2 lakh, August 3 lakh, November 4 lakh, March 1 lakh. Total expenses 10 lakh plus borrowing cost 74,125. Then total to be capitalized in factory building 10 lakh 74,125. Friends, how we computed? We computed average expenditure, we computed weighted average rate of general borrowing, applied the rate on specific borrowing and general borrowing, computed the borrowing cost to be capitalized, and that is added to the cost of the factory. Next, commencement of capitalization. When the capitalization should be commenced? Capitalization should commence when all the following three conditions are satisfied. It's a cumulative condition. All the following three conditions are satisfied. 1. Expenditure for the acquisition, construction or production of a qualifying asset is being incurred. 2. Borrowing cost being incurred. 3. Activities that are necessary to prepare the asset for its intended use or sale are in progress. There should be some expenditure incurred on qualifying asset. Example, we constructing a factory, we incurred some expenditure on construction of the factory, some assets that has been transferred for construction of the factory, that we can say that expenditure for the acquisition, construction or production of the qualifying asset is incurred. And condition 2, borrowing costs are being incurred. That means we availed a loan for the construction of the factory, and for that purpose some interest on loan is incurred. And third one, activities must be in progress. We purchase a land and the land is under development for construction of the factory. So we can say that the activities are in progress. But we purchased a land but there is no activity for the construction of the building, then we cannot capitalize. We can capitalize only if all the three conditions are satisfied. There should be some expenditure incurred for qualifying asset, and a borrowing cost must be incurred, and there should be some activities that are in progress for the construction of the qualifying asset. So from this day onwards we can commence capitalization of borrowing cost. Next, suspension of capitalization. During a period we should suspend the capitalization process. Capitalization of borrowing cost should be suspended during extended periods in which active development is interrupted. We are constructing a qualifying asset, the development is interrupted due to strike or something. During that period we should suspend the capitalization. Example, certain heavy construction equipment is shifted to another site. We are constructing a bridge. Certain heavy equipment related to the construction of the bridge that is shifted to another site. Because of that, the construction of the bridge is interrupted. Therefore, for the period of interruption, the capitalization should be suspended. We cannot capitalize borrowing costs during that period. Next, we discuss certain instances capitalization of borrowing costs need not be suspended. Example 1, capitalization of borrowing cost is not suspended when a temporary delay is a necessary part of the process of getting an asset ready for its intended use or sale. The keyword is temporary delay is a necessary part. For example, we are constructing a bridge. Due to high water level, the construction of the bridge is interrupted. The high water level are common during the construction period in the geographic region involved. For example, in the state of Kerala, we cannot do any construction activity in the month of June due to heavy rain. That is common in the geographic region. Therefore, during that period, we need not suspend the capitalization of borrowing cost because that is common in the geographic region. that temporary delay is a necessary part of the process of getting the asset ready for its intended use or sale. Therefore, we should not suspend the capitalization. Example 2. Capitalization of borrowing cost is not normally suspended during a period when substantial technical and administrative work is being carried out. The word substantial is very important. Substantial technical and administrative work is being carried out. During that period, you can continue the capitalization. You need not suspend the capitalization. Example, the asset is about to complete. There was a temporary delay of 25 days due to some technicality. If that is a substantial technical work, then you can continue the capitalization. You should not suspend the capitalization. Next, cessation of capitalization. When you should stop the capitalization. Capitalization of borrowing cost should cease when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. When all the substantial activities are completed, then you should stop the capitalization. Example, physical construction is completed, but some routine administrative work is continuing. That administrative work is not a substantial administrative work. It's a routine administrative work. Example 2. Construction is completed. Certain minor modifications such as decoration of the property to the user's specification is outstanding. You constructed the asset, the construction is completed. The client asks for certain minor modification such as decoration. That means you substantially all the activities are completed. Then the capitalization should be stopped from that date. When substantially all the activities are completed, capitalization must be ceased. Next situation. When the construction of a qualifying asset is completed in part and a completed part is capable of being used while the construction continues for the other part, capitalization of borrowing cost in relation to that part should cease when substantially all the activities necessary to prepare that part for its intended use or sale are completed. For example, you are constructing a smart city or business park. There will be different type of building. You completed one building. That building can be used while construction continue for other building. Then capitalization of borrowing cost in relation to the completed building should cease, stopped. Because substantially all the activities necessary to prepare that completed part for intended use or sale are completed. An example is given, a business park comprising several buildings, each of the building which can be used separately. In that cases, the borrowing cost incurred for the completed part should be capitalized and capitalization process should be stopped from that date on that completed building. We will see one question. A company construct building to give it on rent, completed the building construction on January 1. It expect that it could be completely rented out by February 1, but due to adverse market condition, it could rent out only 40%. The construction is completed on January 1. Therefore, from January 1 onwards, the borrowing cost incurred cannot be capitalized. Only up to January 1 that can be capitalized. Only 40% is rented out is immaterial. The capitalization should stop when substantially all the activities related to acquisition or construction or production of the qualifying asset is completed. Next, we will discuss one important part of this accounting standard, explanation to paragraph 4E of accounting standard 16, exchange differences arising from foreign currency borrowings. Explanation to paragraph 4E is a very big paragraph. We will see one example. F Limited has taken a loan of US dollar 10,000 on April 1, 2019 for a specific project. Interest rate for that foreign loan 6% per annum. Exchange rate 1st April 2019 rupees 70 per US dollar. Exchange rate on 31st March 2020 is rupees 75 per US dollar. The corresponding amount could have been borrowed by F Limited in local currency at an interest rate of 12% per annum as on 1st April 2019. The company availed a loan of rupees 10,000. Interest rate was 6%. If the company had borrowed that loan from India, normally 12% interest per annum should have been given. The exchange rate on different rate 1st April 70, 31st March 75 per US dollar. We will see how it will be treated as per explanation to paragraph 4E. Compute interest for the period, that is US dollar 10,000 we availed as loan. The rate of interest is 6%. The closing rate is rupees 75 as on 31st March 2020. Therefore, the interest will be rupees 45,000. The rate increased from 70 to 75 on 31st March. Therefore, the liabilities increased. The liability is a monetary item. All monetary item will be translated by using the spot rate, that is 75. The liability is 10,000 US dollar. If we translate that to 75, there will be a exchange loss of rupees 50,000, that is 10,000 into 5 rupees. If you had taken that loan from India, our interest will be 10,000 into 70. That was the rate on 1st April. We availed loan 10,000 into 70 into 12% interest, that is the Indian rate. 84,000 will be the interest. But for us, the interest is 45,000 because we availed loan from foreign country. There is a difference of interest. The difference between interest in foreign currency and interest in Indian currency loan is 39,000. 84,000 minus 45,000, that is 39,000. We have a benefit of 39,000 rupees because we availed loan from foreign country. But we will have exchange loss of 50,000. Therefore, accounting standard 16 say that out of this 50,000 increase in liability, rupees 39,000, that is the difference between Indian currency borrowing and foreign currency borrowing interest, that should be considered as borrowing cost. Therefore, total interest will be 84,000. 84,000 should be considered as borrowing cost, and balance 11,000 should be charged to profit and loss account as exchange loss. That is 50,000 minus 39,000. 11,000 should be charged to profit and loss account as exchange loss. 45,000 plus 39,000, that is 84,000. That is the maximum interest that should be treated as borrowing cost. That is explanation to paragraph 4E of accounting standard 16. Friends, I hope the video was beneficial for you. If you like the video, kindly press the like button, subscribe button, share button. If time permit, I will upload more videos. Keep watching. Thank you.